Good morning, my fellow traders. Hope you all had an awesome holidays and I hope you enjoyed your days off from the market. A very slow week. Last 2 weeks were really slow weeks, so we didn't have many opportunities to take trades in the market, but we still managed to take some good trades in NatGas and some other commodities, which I'm going to talk about in the first part of the video. In regards with trade alerts sent in the group, I've only sent one trade alert and that didn't play out. But like I said, it's not a signal group. If one trade didn't play out, which was right here, AUDCAD, that was sent as a trade alert, that didn't play out. A nice pullback entry in a nice downtrend, and exact same entry played out if you looked here on GBPUSD. That played out, but that didn't play out. That is why learn from the group, don't use it as a signals. And then we have this trade played out nicely, a pullback entry right here. If you are my student, a 382 Fibonacci entry played out that was mentioned in the live session, not this week, a week before that. So some good trades, but very slow market. Hopefully next week it's going to be back to normal. So we're going to talk about some commodities, the zones I mentioned in my videos, sent in the priority group, how we're going to enter the trades from these zones and how some zones nicely played out. Not many because of the slow market, but few did play it out nicely. Then we're going to go through NatGas, gold, silver and crude oil. So starting with the zone of commodities, then we're going to talk about Forex and indices as well. So first I'm going to give you a very good example of copper here. Now the traders don't take the profits. Now if you look here, this zone was sent to the members right here on 22nd of December. Now if I scroll down, and the second was sent on 29th of December. So a week later, right here. So the first one was sent to the members to look at this yellow zone to look for your possible trades, a bounce that we need to capture. From the minor zone, I expect good bounce. I expect 1-to-1 to 1.4 to 1 reward to risk ratio from these zones. And then we were not looking for reversal. For reversals, I was looking at the zone below. So clearly mentioned in a week before and the last week, I've said that not using this zone already played out, means I'm not going to use this zone anymore because I'm not a greedy trader. A very good example of that I want to teach you. Right here, when the price hit the zone, forms a condition right here on a minor zone. We go back on 1 hour, nice double bottom. We had entry number 1 and target number 2. Both has been hit and 1.4 to 1 reward to risk ratio was my target. And then what? The price, as you can see, broke below this level because it was not a strongest zone. The strongest zone is right here for the copper. It is a quick analysis I'm going to give you guys as well since we are doing a weekend's video. Now this zone, right here the numbers in blue, I was paying attention for the next possible buy trade. But for the members, I've sent these zones, prepare them to look for your entries, exit in time as well. Now if you go back and see, previously the price reversed from here massively if you look here. That is why this zone is something I'll be looking at for my possible entries. I want to enter aggressively. If you look here, I entered with my double bottom entry confirmation, which is not an aggressive entry. Means I want to wait for the two confluences. Number 1, price must reject from the zone once, and I want to see another rejection that yes, the buyers are interested to push the price higher. That is why my entry was not aggressive. It was less aggressive entry, which is double bottom, a double confluence. That price is likely going to bounce up from here. Then I exit my trade. Now looking at this level, once the price at this level, I might go aggressively, which is my bullish engulfer, pin bars, a 382 candle. So good example of that. When you take your trades from the minor zone, don't be greedy. Don't expect reversal. Take your profits. See, 1.4 to 1 reward to risk ratio is a better reward to risk ratio. What else do you need? And if I keep my stop loss same as my first target, which is insane. So that is how you need to look at the market. Don't guess in the market. Set your own rules. Rules are, yes, I want to enter double bottom. That is final. That is set. Don't get tempted. When the price bounces zone, there is a temptation there that you want to enter. You don't want to miss the trades. You are like, yes, if the price, let's say, don't form a double bottom, what if I miss this trade? That's totally fine. If you miss it, you miss it. But here you see, if you have a rule of double bottom that you're going to enter double bottom from the trades, stick with the rule. If you have your rule there, only then you can become profitable and successful trader. Here in this zone, I've already decided that I'm going to enter aggressively. That's fine. Once the price hit, this zone forms engulfers, aggressive entry, I'm going to take it because I've already decided that it is my rule and that is how I need to analyze the market from the minor to the major zone. You've seen the example already. That is how I teach to my members and that is how I also teach you guys here on YouTube for free. Then we have wheat here. A zone that I've been sending to the members from last couple of weeks, but finally this week, as I said, it was a slow week, but that plays out nicely as well. With copper, I've sent the other commodities as well. If you look, scroll up there, right here, I've said that the price is heading towards a level of resistance. In red, if the price pulls back to the zone, we have a likely chance the price is going to push down and potential sell opportunities on smaller time frame. Now, right here, what do you see? A bearish engulfer. Perfect entry. Nicely pushed down, hitting 1.421 reward to risk ratio targets. That is how we need to take our trades. Not every zone plays out. That is why if there is no condition, there is no entry. For example, NatGas. We were looking at a possible entry here. Aggressive entry. Do you see any entries there? No entries on 4-hour time frame. Yes, if you are trading on smaller time frame, you might have taken an entry right here. That would have hit your profit easily. But I was looking on 4-hour time frame. Either a double bottom here or either a bullish engulfer here. No condition means no entry. No double bottom here. Price broke below. That was clearly mentioned, which you're going to go through in the analysis part of the video, that once we are broken below, the price is going to fall from here, and that has happened. Means no conditions, no entries. I've also sent the other commodities like corn, crude oil, and all the other soft commodities. Sometimes I send US cocoa. All the commodities you see here, corn as well, wheat as well, sugar as well, all these commodities, platinum. If there is conditions, we enter the trades. I send these to my members every week. So if you're a member, only look for the condition. For the YouTube audience, I keep on showing you these conditions. For example, crude oil. We were looking at a possible entries here on crude oil from this zone. Right here, I've sent these zones to my members. Look for an entry. With that, I've already mentioned this zone to my YouTube audience, that look for your sell condition. Do you see any sell condition on 4-hour? No condition. Then why are you going to enter the sell trade if there is no condition? Yes, this zone will likely to react nicely. But if you are trading on 4-hour swing trading like me, then there is no entry. But if you are someone, take your trades on 1 hour. Instead of sell, we had a buy entry and price pushed up from here. So no conditions means no entries. Yes, if you're looking at this bearish engulfer, that has played out as well. And then we had a bullish engulfer for our traders who are looking for the entries on 1 hour. But for me, I look for entries on 4-hour. That is why I've not taken this trade. Then talking about the indices and stock market, I've sent some indices and some stocks to look at for the possible trades. For example, Tesla nicely bounced up from my zone. Morning star pattern here with the gaps. If you have not seen my videos how to identify these patterns, please see that, how to trade valid candlestick patterns. The links are in the description. That will really help you to identify these patterns. For example, Morningstar pattern started to bounce up from here. It might form double bottom as well, but it might push up from here. Has started to push up from here. Right here, as you can see, Tesla, the zone was already sent to the members, so look for your entries from this zone. With that, I've sent the other indices like NASDAQ, JP225, Hong Kong Index, TE40, whatever I see a condition, a possible condition or setups coming up, I send them to the members to look for the conditions. So that is how we need to look for the entries. UK 100 played out perfectly fine as well from the zone that was sent to the members. When? On 15th of December. And previous week, we had a selling zone from where the price has started to push down and now heading towards our green zone. That is what I've already prepared my member. You see this green zone, we were looking at the possible entries right here sent on 15th of December, and before that, a week before 15th of December, right here we entered this trade. Nicely pushed down, zone to zone trading, manage this trade. If you know the risk management, if you know how to manage your trades, capture your profits, you see the insane amount of profits you could have made right here. And what do we have right here? A bullish engulfing candle. I've missed this trade because I was really busy on those dates. But if you're a member, I normally enter a few pips below somewhere here. The way I calculate my pullbacks is from the low to the high of the candle. Right here, 50% would be my entry. If I would have entered this trade, I would have entered right here. In that case, my entry would have been triggered here, and I would have managed this trade to 1.4 to 1 reward to risk ratio, set my targets accordingly below the zone as well. So that is how you need to take over trades with rules, with conditions. The rules are when the price hit my zone, it's also oversold, also bullish engulfer, a major zone from where the price has previously pushed up from. Look for these zones for the entries. Everything is going with our analysis, and that nicely pushed the price higher. Then we have this Forex report sent to the members, and right here this zone was a zone that we were looking for the possible bounce out of, and as you can see, NZDUSD nicely bouncing up out of this double bottom on 4-hour. That's right here formed this pattern. This trade is still running, and let's see how this goes. Then we have GBPUSD right here. The zone was sent to the members to look for the possible entries from this zone, and as you can see, the price is nicely bouncing up from this zone. Already bounced up, and that is how we need to look for the trades. we had a nice 382 candle pin bar, few pips above on 1 hour. And if you look, that nicely pushed the price. I'm still looking for the entries on this zone with a double bottom pattern as well. So everything is happening with the rules, with condition, oversold in the zone, pin bar on 1 hour, and that is how you take your trades. Not every zone play out. I want to show you one trade. Now, this was a trade I've sent last week on my other broker's platform where I take my trades. That hit my take profit right here with the spread. I'm not sure if that has hit your take profit as well. Please do let me know. If you are my member, let me know in the email. And also, if you are taking this trade in a Discord group, please do let me know so that I can add that in a winning trade. For me, on one platform, that was a winner. And on the other platform where I take my trades, that was a loser. So it depends on your broker how it goes with the spread. For me, that was a break-even trade for me that barely hit the take profit on Ovanda. But on the other platform, that hit my take profit. So please again do let me know so that I can add that as a winner or a loser in the spreadsheet of 2025. I'm going to share the spreadsheet of 2024 in my next video where I'm going to share the results throughout the year we have got in 2024. So a few other opportunities we mentioned in the live session which we do every week for the Priority Plus member and some other pairs we are paying attention. It might hit this week or next as the market is coming back to the normal. It's going to be crazy week as Trump is going to take charge. We might see some crazy moves out of some commodities as well, which we're going to talk about in the upcoming analysis of gold, silver, crude oil. So let's start our analysis with NatGas, gold, silver, crude oil, starting with natural gas. So let's see what I've said in my last video so that we can connect the dots from there. Very simple. We are above 50 EMA on 4-hour time frame. All I'll be looking at either a double bottom formation right here from this rejection zone, pull back to it without a candle to close below the previous low. If the candle closed below the previous low, in that case, we will turn short-term bearish. So that is what I'll be looking at here on natural gas, but break below this low again will turn bearish for short-term, which is something I'm going to update you guys in the upcoming videos. Perfect. So do you see any double bottoms? No double bottoms. I've said that if the price break and close below this low, it's going to likely push down and crash from here short-term. And that is exactly what has happened. Means we were bearish all the way from the break and price did push down from here. So first I'm going to go through NEMIX, then we're going to go through spotcapital.com and Ovanda. Now NatGas is trending higher, slowly and steadily, trading above in this channel. Right here, every time the price hit this zone, it pushes up throughout this channel. If you follow me from a couple of months, I've already mentioned this channel a couple of videos before. Now it is something I'm talking about on a higher time frame, not on a smaller time frame. Entries on a higher time frame, as you can see, the price hit this channel right here, hit this channel again, then pushes back down. Before that, this channel acted as a good level of support as well. Now, if you follow me, I don't normally use this channel for my entries. I use support and resistance and the entry patterns for my entries. But just for analysis, I want to also show you this channel that price can likely to hit the trend line on a high time frame and then range in between and eventually hit the level above, which I'm looking at in long term. Now, as long as the price is not breaking and closing below these lows, once we are broken below these lows, in that case, the price will turn bearish. Then we can likely to go down to these levels again, 1.50. But it is something that is not likely at this point. The least I'm expecting the price to move in this channel for the high time frame traders. But for the trend to change, for now, it is an uptrend. Price is making higher highs and it must break below the previous low right here to completely turn bearish, or this low right here to turn completely bearish. So for now, for the long-term traders, that is still an uptrend. Now, if you look in here, if you look at 50 EMA, the price still has 50 EMA support on a daily time frame from where we can see another bounce out of. Now we do have a level of support, which is something I'll be looking at on 1 hour time frame for the possible entries as well, which is 2.905 goes to 3.019, from where we can see a possible conditions like bullish engulfers or double bottom entry patterns. Talking about on a daily time frame, higher time frame trader, let's say the price won't reach this area. It forms red and a green engulfer above 50 EMA, that will become a strongest buy signal. Going to be strong pullback entry on daily after this big retracement. These are just a retracement I'm expecting. I want to give you examples as well of pullback entry. For example, price made a high, we had a pullback at the trend line, a bullish candle, not an engulfing candle, but a bullish candle on a smaller time frame, that was an entry. It breaks above this high, right? Then the price used the previous high right here On a smaller time frame, we had an entry. On high time frame, if you zoom that is also a pin bar right here. A pin bar right here. That pushed the price higher. And we also had a perfect entry on Ovanda and Capital.com on a daily time frame, not on this platform. But overall, the price used the previous highs as a level of support, which is at this point right here, or 50 EMA as a level of support right here. Now, that is also a support trend line on 4-hour time frame, which I'm going to go back in a very short while. So, on a high time frame, look for your bullish engulfer signals are very important. Market talks to you. Market give you signals that yes, the buyers are now in control. We have orders now for buying. The buyers have taken over. We're going to push higher from here. That is what? That is candlestick patterns that talks with us. On a daily time frame, if you look here, as I mainly look at the other platforms, what do we have? A bearish engulfer. Right here, that pushed the price lower. Means we have a short-term bearish pressure and we are likely pushed down. That has happened here. And if you look here on Ovanda as well, bearish engulfer with the overbought situation. So that is some pullbacks we can expect from natural gas. Doesn't mean the trend is changed unless we are broken below these lows. You see the price in an uptrend. We had this pullback, and then another pullback. So for now, look for your buy condition on a higher time frame. Now, as we are taking over trades on 4-hour, I'm talking about the smaller channel and smaller trend line. Previously, if you remember, we had this fake out clearly mentioned in my previous videos if you have seen that. And price forms a bullish engulfer and then shoots higher. And then what? We had another push down, hit of this trend line, price formed a bullish engulfer right here, and then it pushes back up. Open above in gap. Now we are back in the same zone, same trend line right here. We might see another fake out. Very important. And let's see how this open. We might see an open higher in gap as well, looking at this nice trend line. If that happens, we are still bullish. If it breaks below and opened somewhere here, means we are now short-term bearish. But let's talk about what if we open higher above this trend line. If that happens, we are still not taking our sell trades. If that happens, we can expect a pullback. If the price forms a bearish engulfer here, I'm going to go short and smaller scalp only. Gonna go 1 ATR for my targets. So for the smaller time frame, if the price open higher above this trend line and is below 50 EMA, if there is an entry condition like bearish engulfer below 50 EMA, I'm going to go short term only, exit my trades. And for the next entry, I want to see a complete break and close below this trend line. If let's say we have one candle closes below like this, and then we have a very next candle closes back up, means the price is going to push up from here again. So be aware of the fake out that can still possibly happen here. On a smaller time frame, just look for your sell, pullback, entry, bearish. That is all we need to look at until the price hit this level, which I've already mentioned right here, these numbers in blue. Let's say if the price opens below somewhere, then we're going to start to look for the bearish trades only. We can see a break below, a retest of this trend line, bearish candle, and then a possible fall to this level from where we're going to start to look for the buying opportunities like bullish engulfers or double bottom, as this level has acted as a good level of support and resistance in the past, previously on a smaller time frame and on a daily time frame as well. That is why I'm still looking at and paying attention to this level for the possible entries. So keep an eye. These are conditions now I'll be looking at for my possible entries. On Capital.com, exactly same condition. Look at this zone, which is 3.031 goes to 3.119. On a smaller time frame, if the price comes down to this zone, look for bullish engulfers or double bottom or a zone below right here. So keep an eye on this zone. On a smaller time frame, I still have this little anchor level right here in yellow. If the price pushes down here and forms a condition here, I'll still go for my long trade. So as long as we are above these previous lows, we are not completely bearish. We can just look for the pullback and a bearish engulfer and keep on taking shots till we are here, or till we are here to look for your possible buy entries from this zone right here. These numbers in blue, as you can see, 2.894 that goes to 2.972. An anchor level and a support level is right here. 3.031 goes to 3.119. So match these zones with my charts as well, so look for your condition. But again, if we are open above, then we have a likely chance the price will start to push up from here and might start to continue to push up in a trend to the next level of major resistance, which I'm expecting likely in a long run. I don't know when it's going to hit, but if the price keeps its trend, then it is a level I'm expecting a price to hit in next couple of months. For now, wait and see, and I'll keep you guys updated with every single move and every single day. For now, bearish short term, just pullback entry bearish if we have a condition. No conditions means no entries. On Wanda, the zone below right here, very simple. 3.238 goes to 3.355, from where we're going to look for the possible entries like bullish engulfers or double bottom. Now here on Wanda, a good thing is that the trend line is also matching with our zone. If you have a condition at this zone with bullish engulfers or double bottom, that will be a very good entry and strong as entry, and I'm going to go long from here, but I want to see a strong bullish engulfer and or double bottom for the less aggressive trader. Double bottom will be less aggressive entry and will be strong as entry as well, but aggressive entry is something I'll still be looking at for the possible entries. For now, on 4 hour, we have a pullback entry, bearish below 50 MA. I'm going to go short from here. So short term bearish, but once we see a buy condition, we're going to exit bearish trades and look for the buy trades from these zones. Next up, we have gold. Gold is now in a process of a pullback. Now, the Trump is going to take power this month. Once you're going to take power, the dollar is going to push higher because you're going to try to improve the economy and the dollar will get stronger. And with that, the gold will push lower. So fundamentally, gold will likely to crash and hit the level below right here once the Trump is in a power. That is why I still have this level below. I'm going to give it to you so that you can have these levels for the long term. 2.515 goes to 2.539, from where we can see some bounce. It's not going to hold for longer if the price hit this level, but expect some bounce, get some trades, and then we are looking at the level below, even lower right here in a long run if the Trumps came in the power and if we keep the things as expected. But for the short term now, until he's not here, for short term, what we're going to look at. As the price just made a new high, broke above the previous highs, we are above 50 EMA. The next candle I want to see a bullish engulfer. If that happens, that is my entry, and I'm going to go 1 ATR, which is $10 for my targets, and I'm going to manage that to 2 ATR or $15 for my target. So pull back here, a possible entry is expected above 50 EMA. Bullish engulfer is something I'm expecting above 50 EMA and only going to take buy trades. On silver, we are above 50 EMA as well, but we have not broken above this little anchor level. So on silver, we might see some pullbacks as well. If you remember, I've said that we're going to see a possible bounce from here. Silver might range for a while, and I'm not buying silver unless and until we are broken above these highs. Once we are broken above these highs, only then I'm going to start to look for my pullback entry bullish. Looking at this bearish candle, expect some pullbacks and then a range, and then gold might push the silver higher as well. So I'm not only looking at gold for now, the possible buy entries, not for silver. For silver, I want to see a break above these highs for my next buy entry. Looking at this bearish pressure, we can see a possible bearish moves short term from silver. Lastly, we have crude oil. It's now broken above this level that has not turned a level of support, a previous resistance, which is right here, 71.77 goes to 73.11. Now, two ways, if you know Fibonacci entry, which is right here. Buy limit order, 50% retracement, 72.82. Take profit can be 1.618 retracement. Very aggressive entry, but gives you a good reward to risk ratio if you want to take an aggressive and a risky entry. That's totally up to you how you want to take it. That is aggressive entry if that happens. If the price pulls back, buy limit order here, take stop loss here and take profit 1.618 retracement. But for me personally, I want to see a pullback. We can see a deep pullback, could be above 50 EMA, a bullish engulfing candle. In that case, I'm going to go long. If there is a condition like bullish engulfer within this zone, we do have one bullish engulfer, but that is not something I'm considering at this point because the price just broke above with the next candle. That is why I want to see one more pullback, a bullish engulfers or double bottom. In that case, I'm going to go long from it. So it is a buying zone now. All I'm looking at buying trades either aggressively from this level, less aggressive entry, which is bullish engulfers, double bottom, pullback entry, which is a big retracement above 50 EMA, bullish engulfer, and I'm going to go long from here. So that is all I'll be looking at here on Crude Oil. And that is it for weekend's analysis. Hope you got a value and I hope you're learning something out of my analysis and improving your trading as well. If yes, give this video a thumbs up, subscribe if you're new so that we can all trade together and trade efficiently. Hope you trade green. I'll see you guys in the next video. Have an awesome weekend. Take care.